Back to Ox Talks. Appreciate you being here watching the show today. I saw a very important article come out just a little while ago on CNBC. I thought it was worthwhile coming out here and sharing with you. And again, it's released on CNBC and it's dealing with a Goldman Sachs analyst making some very, very strong remarks about the stock market and alluding to the sell-off that happened just back in August and how the markets have recovered so quickly, sentiments recovered so quickly, and is the complacency back again? So let me jump right into it just for a couple minutes with you. Goldman Sachs issues warning on how quickly market confidence has recovered from an August stock market slump. It says the speedy return of market confidence following a dramatic global sell-off in risky assets should be seen as a cause for concern, according to the head of asset allocation research at Goldman Sachs. So it's not an analyst, actually, it's the head of asset allocation research at Goldman Sachs. Okay, speaking to CNBC Squawk Box in Europe on Goldman's Christian Mueller-Glissman said investors could think about the early August slump as something akin to a warning shot. Stock markets ticked off the month under intense pressure as concerns over a possible U.S. recession and the unwind of the popular carry trades. Linked to the Japanese yen pulled stocks off their record levels at that time. The S&P 500 lost 3% on August 5th, notching its biggest one-day drop since 2022. Says since then, and here's the takeaway, since then, however, expectations of imminent interest rate cuts from the Federal Reserve and improving U.S. economic data, I don't know what they're talking about, have sent stocks soaring. The S&P 500 has jumped 8% since August. This is August 5th, excuse me, while the Dow Jones Industrial Average has climbed more than 6%. Quote, he says, going into this, you had like 1 or 2 months where positioning and sentiment was at the upper end of the range. People were bullish, according to Mueller-Glissman. We were actually worried about a bit of a correction because, he says, at the same time, while you had bullish positioning, momentum on the macro was a bit weaker. You had negative U.S. macro surprises for like a month and a half before that, and you actually started to see Europe and China macro surprises turn negative as well, he added. He says, what's concerning now is how quickly the market has gone back to where we were before. And we can discuss that, he says, but certainly that shows that we are, and he used the word sadly, we are sadly nearly back to the same problem we were at just a month ago. He says market participants are currently awaiting the release of key U.S. inflation report to get a better picture of the health of the world's largest economy. U.S. personal consumption expenditures, price data, the Federal Reserve's preferred inflation gauge is scheduled to be published, and that will be probably in a couple of days on Friday. It comes after Fed Chair Jerome Powell said late last week that time has come for policy to adjust, bolstering expectations for a rate cut at the central bank's September 18th meeting. And there's no doubt the markets have been, as of late, rallying on that, expecting lower rates, and that's what's fueling this, and some other things as well. Powell declined to provide exact indications on the timing or the extent of the cut. So the markets, again, are going on hopium. Powell did say they're going to reverse course. It's time to do that. He didn't say by how much and didn't say when. So there's a lot of, let's say, things that we don't know as of right now relative to these anticipated rate cuts, or I should say the cuts that the market is expecting. And he says, the article continues, asked where that leaves risk appetite for the coming months. And Mueller-Glissman replied, what happened on August 5th and around there was obviously a huge technical correction. So that was, he says, a buying opportunity. He said the current challenge for market participants is that stocks and risky assets have completely reversed losses to get back to where they were before. He says, what I find quite interesting is risk appetite is not back to where we were before. And what actually happened is that safe assets, bonds, gold, yen, the Swiss franc have actually not sold off. By the way, today I see gold and silver are selling off somewhat. The market, just before I started doing this live stream, the market, I believe NASDAQ was down pretty good. And the S&P was down a bit as well. So look at what he's saying here. And when you get somebody from Goldman Sachs, a high up internal person coming on CNBC, right, the biggest market cheerleaders out there, and putting this information out on a interview on a major channel like that, where you have millions and millions of investors watching this. They always come out at some point and they drop tidbits, warnings, a warning shot across the bow, whatever you want to call it. Look, for all you guys are going to leave comments below, to the video later on today, chewing me out for being anti-stock market. That's not what this is about. I'm not giving you advice here. I'm not an economist. I'm not a stock analyst. I am just giving you the information, and we take it at face value. Okay, that's what we should be doing. Analyze it, critique it, be critical of everything that you're fed. Certainly, if it's out of a mainstream source, but there's no doubt he's using the word warning shot. He's using the word complacency. Okay, those aren't my words. I didn't see in the article where he's saying, liquidate your positions, but he does say later on in the article, you want to go check it out, it's on CNBC. He does say later on that you might want to consider balancing your portfolio not as much in the riskier stocks, maybe in some other assets. I think he talks about bonds, talks about gold, things like that. So check it out for yourself. Again, not trading advice, not financial advice, but I thought it was very, very telling. Okay, so we have. I saw another article that I'll get to probably later on today, that the market's also waiting for NVIDIA earnings to come out. And of course, that's going to be a savior to take the market up the next leg. And look, maybe it will. Maybe the market will continue to believe, the market participants and investors will continue to believe the Fed is going to do what it says and start cutting rates with the September meeting. And that's going to be positive for stocks. Obviously, there are a lot of you out there that believe that there's no reason why this rally across the board in the Dow, the S&P 500, the NASDAQ cannot continue. And we'll have to see. All right. With that being said, I'll leave it there for now. Again, if you want to check out that article on CNBC, I think it came out just about an hour or an hour and a half ago. All right. Talk to y'all soon. Bye.